Welcome to the BF Anderson Technical Report for November the 29th. Let's get right into the charts. A lot going on. We know yesterday that the market had a major rally. The Dow was up over 600 points. As you can see here, we are starting to see some improvement here where the NASDAQ, which is the NASDAQ composite, has gotten back above the 25-day moving average. Now, this is a good improvement in the trend. However, it came on volume that was somewhat light. It was below average. Therefore, you don't want to make too much like this is some kind of major trend reversal, but it does look like the market's starting to bottom or trying to bottom, and that's a good sign. Now, on the weekly NASDAQ, it really doesn't make a lot of sense to look at last week because we are looking at a 3.5 trading days during the holidays. But you can see that we continued to stay below the 35-week moving average. The 35-week moving average has somewhat flattened out. However, on a weekly basis, it's a tough call. Now, on the high-low index, we were starting to see more new highs. However, with the sell-off last week, the number of new lows picked up again relative to the number of new highs. This is back in somewhat of a negative territory, so somewhat of a mixed bag. Now, you can see on the New York Stock Exchange 52-week new highs, new lows. We're still getting above 40 a day. On Wednesday, we had 103 new lows, as you can see here, and then on Tuesday we had 233 new lows. So we're still seeing, a little bit of negatives out there, but things are somewhat improving here. Now, on the long-term graph, which is the 10-month versus the 20-month moving average, the index has now gotten back up to the upper moving average. We don't want to see a cross here. We want to see this thing stabilize, probably move sideways a little while, and then break out to the upside. So the long-term indicator looks okay. Now, this is the important indicator that I think should get the most attention. This is the put-call ratio, equity only. This measures fear and greed. Now, you can see here we've gotten really into extreme fear. So again, back to being a contrarian, you really don't want to ignore this because this is probably presenting ourselves with somewhat of a buying opportunity. Now, this is a secondary indicator. The trend indicators are the primary indicator. They are showing some improvement, but hopefully we're getting confirmation here that we've reached maximum pessimism. In other words, everyone's gotten so pessimistic, they just really can't get any more pessimistic, but we'll see. But it does look like to me this is creating somewhat of a buying opportunity. Now, I did want to point something out that I think is important. You're going to have easy years, and then you're going to have difficult years. And it seems like to me, and it's pretty obvious, that difficult years are followed by easy years. So this year has been difficult. I mean, look at the volatility relative to last year. I mean, the volatility is twice as much as last year. Now, if you remember, in the end of the fourth quarter last year, going into first quarter, we got the big rally based on the tax cuts, and then we pulled back, had a major correction, have pretty much consolidated, attempted to rally again, and with all the Chinese tariffs and the Federal Reserve raising interest rates, we pulled right back down into that trading range. So this has been a difficult year. Now, will next year be an easy year? Well, we'll see, but it does seem like easy, difficult, easy, difficult. Now, if you go back here and look at 15, 16, that was really difficult because you thought things were going okay, then you get the drop, then you get another drop, and then we lift off. So you need to make as much money as you can in your portfolio during the easy years so that when you hit the difficult years, you have a cushion. Now, I wanted to also discuss something called peak of perception. This is Apple, and you can see here Apple got up to $1 trillion company. Everybody and their brother knows about it. In other words, there's a peak of perception. Everybody knows that Apple is a great thing. So, if you really think about investing, the bottom line is you want to find something good. You want to find something where the demand for the products and the services is robust and they've got a good management team in there. And so you want to find something good and get there before the next guy. So who's the next guy? It's not your Aunt Sue. It's more likely something like Fidelity Funds. So when you start to realize that something like Apple, this is going to have a tough time because of what we call overhead supply. You've got a lot of people that are stuck in the stock up here at this top, and every time the stock rallies, I think you're going to have selling pressures that's going to keep a lid on this stock. But I do think Apple, Amazon, Facebook, they all reached what we call peak of perception, and I think we've got to spend more time now looking for what's going to be the next thing. So that brings me to the top 5 list. Again, this is a company called Genomic Health, which is biotech. It's making the top 5. This is a company, now this is an interesting company called Intelsat. They own a satellite network. And one of the things I'm studying right now that looks very interesting is a new technology called 5G. Now you'll see Verizon, advertising that they're bringing out 5G, which is going to be a dramatic improvement in your wireless signal that you're receiving to your cell phone or your computer or your TV. Now here is Spirit Airlines. For some reason here we're seeing a real interest in airlines on our list. We also have United Airlines on the list, and we have Alaska Airlines and so forth. I guess it's basically because oil prices are dropping that you're seeing this rally in Spirit, but they're also saying that they're going to have a good quarter and that their costs are under control. Here's a software company that we're familiar with called Twilio, acting okay. You can see where the moving averages are now crossing. We're getting the 25 back above the 50. Stock is close to making a new high. Keep an eye on Twilio. Now here is another 5G type of technology, company called Xilinx. Now realize now the semiconductor stocks and basically all the technology stocks have really gotten hit hard in this correction, but this stock is held up. It's actually making an all-time new high. Now Xilinx is making chips for data centers and so forth, but they're also making semiconductor chips for the 5G technology. So if you have any questions, give me a call. Thank you very much.